using AI to create an inclusive financial economy.
Thank you for being here. It's a pleasure to present to this wonderful stage, especially following a great panel where we discussed a lot of use cases for artificial intelligence in different verticals. For my presentation today, we're going to focus on a specific vertical, which is the use of AI in decentralized finance. So how we can actually combine artificial intelligence and blockchain to create a better decentralized financial economy, a fairer economy, an economy that is more inclusive for everybody and where everybody can actually participate. So first and foremost, a little bit of context. I'm also going to start with a question. Does anybody here doesn't know what ChatGPT is or haven't yet played with ChatGPT? Nobody. Fantastic. So that's what I was expecting. So since January, we've seen a rise of interest in artificial intelligence in the media and in the general population, mostly due to release of this large language model, generative language model, like ChatGPT, for example, by OpenAI, who's been heavily invested by Microsoft a few years ago. And for the first time, users have been able to experience, to touch, and to play with artificial intelligence, and finally see what artificial intelligence is outside of the regular chatting bots. Obviously, this has been followed by Google, which released their competitor model called BART, and Sparrow as well, and the integration of ChatGPT in the browsers like Bing, and in browsers like Edge, and in search engines like Bing's. And this greatly brought a lot of new attention to the AI industry, to the point that OpenAI predicts that ChatGPT will generate revenues of $200 million by the end of 2023, which is huge, and $1 billion by the end of 2024. But we strongly believe that by the end of 2030, AI will become the #1 industry dominating the tech industry. So after a little bit of context, the release of this product by these centralized tech giants has also started to raise some concerns in AI users, in the general population, especially around how these tech giants are going to use our data. So whenever you interact with a large language model, whenever you interact with ChatGPT, you are training a model. And how are these corporations going to monetize the models that you're training? Of course, they're going to improve them. They're going to make better products. But ultimately, the fact that you're using a free product makes you a product. So this new wave of centralized, and I keep repeating centralized product, have brought attention to the decentralized AI industry. So I operate in the Centralized AI since 2017, together with Janet, who was moderating the previous panel, CEO of SingularityNet. And I'm part of the SingularityNet ecosystem that has been pioneering the use of decentralized artificial intelligence and the narrative around decentralized artificial intelligence since 2017. SingularityNet has naturally evolved into an ecosystem of companies all tackling different verticals that you can see behind here. It's a complex ecosystem. We're not going to go through each and every single vertical, but it's important to understand how users are claiming back the ownership of their own data. And blockchain allow us to keep ownership and to have ownership of our data. I'll give you just a tiny example of a project that we are launching in these days called Rejuve, which is a company that operates in the medical and health, in the health tech industry, especially to support longevity medical research. So in Rejuve, you can contribute with your data to longevity medical research. However, you are rewarded back with crypto tokens, and you have ownership of your data. So you can decide which data you're going to share and which data the company eventually is going to sell. However, the focus of this presentation is going to be how we use artificial intelligence in decentralized finance, which is the vertical tackled by SingularityDAO, which is the company and the project that I have the pleasure of leading, and I founded in 2021. So let's see what we can do. So I had some fun asking ChatGPT if artificial intelligence can actually create wealth for humans. And fun enough, I mean, not funny, I wasn't really surprised, but the answer is pretty accurate. Artificial intelligence can assist in creating wealth for humans, can assist. By improving decision-making processes, optimizing business operations, and identifying new opportunities, AI algorithms can analyze vast amounts of data and provide insights that humans might not have been able to identify otherwise. This can lead to more informed investment decisions, improved operational efficiencies, and better pricing strategies, among other things. So the short answer is, AI is a supporting tool and can be a supporting tool to humans in order to generate wealth. I think we're not going to see before the next couple of years an artificial intelligence that make investment decisions on our behalf. For that, we probably need to wait for the emergence of artificial general intelligence, which was mentioned in the previous panel. But AI can be extremely helpful in making better and more informed decisions, trading decisions, financial decisions in any market, but especially in crypto. So, artificial intelligence have been used for about 2 decades in traditional finance at different levels and with different techniques. However, the innovations that have been brought by artificial intelligence were only available to a selected few, to the top 1% that were able to access these opportunities. So you would need to have network, you would need to be part of a certain circle, you would need to have enough capital to invest to take part to these opportunities. Let's think about Renaissance, for example. One of the most successful hedge fund of all times is extremely selective and extremely expensive to get in. So hedge funds like Renaissance, for example, have been using sentiment analysis for many years to understand what the sentiment was on news media and then later on online around certain assets. So we are able and we can use sentiment analysis in crypto markets to actually understand and predict fluctuations in crypto markets. And we've been experimenting with sentiment analysis and been able to predict the November 2022 BTC crash thanks to our analysis. However, it's not that simple, of course, to simply just scrap social media and understand sentiments and allocate and tag sentiments depending on certain keywords. There is a lot of research that has been done, especially around cognitive bias and cognitive distortion. There's so many conversations. In crypto, we say, buy the rumor, sell the news, because by the time that a news hit traditional news media or blog, is too late. So you need to be on Twitter, you need to be on Telegram, you need to be on Discord. So there's a lot of conversations happening, and it's almost impossible for a person alone to monitor all of this conversation. And this is where AI can be extremely helpful. AI can also be used in traditional and crypto markets to predict fluctuations. Of course, this is also very tricky in crypto markets because they're very new, right? We've been around only for a few years. There's a lack of historic data. However, we can backtest some strategies, and we can see that some strategies have been successful in predicting price fluctuation to a certain level. Here, for example, we've seen that we've been able to predict the price quite accurately on 90% of the cases, backtesting, of course, to 2022. So that's a little trick over there. In most cases, looking at historic volatility. So see when the price was volatile in certain months or certain time of the year, backtesting it and trying to predict future volatility. A very interesting application of artificial intelligence in crypto markets is reinforcement learning. So this is a very dense slide. I'm not expecting that you're going to memorize or understand this slide right away, but it's important to understand that there is a paper online published by Dr. Anton Kolonin, who is one of the leading researcher at SingularityDAO. He's been experimenting with this approach of reinforcement learning, and especially with his AMSA model, which are adaptive multi-strategy agent models. I'm a bit behind, sorry. I need a few minutes still.
Just maybe 1 minute.
A couple of minutes, I'll be rushing,
we're tight
yes.
on schedule.
So the important thing to understand here is that we can use the reinforcement learning models, which are a swarm of agents that are able to understand and to learn from each other on a trial and error method to try to predict crypto market fluctuations. So, rushing a little bit through, 2022 hasn't been the greatest year for crypto with a lot of crashes, and here you see a few of them: FTX, Celsius, Silvergate, most recently the depegging of USDC following the Silicon Valley Bank crash. So This is because in crypto there is a lack of counterparty risk management, and artificial intelligence can help assessing the risk of interacting with counterparties in crypto and in DeFi. So we can use complex models to see what the risk is of interacting with certain liquidity pools, what the liquidation risk is of certain players, and therefore acting accordingly. So AI for decentralized markets, why it's important, why the decentralized aspect is important, why blockchain is important. Well, first of all, because it's non-custodial. So the previous crashes were all by centralized players. So to make it very simple, Celsius, you would send your funds to Celsius, and Celsius will manage it for you. You would lock your funds into an FTX wallet, and then your funds were there on the FTX service. If you use blockchain wisely, and if you actually use DeFi, your funds never leave your wallet. Not your keys, not your crypto. So you can interact with decentralized finance and artificial intelligence in a completely non-custodial way. So even if the party that you're interacting with goes burst for many reasons, your funds are always there, always redeemable, and always accessible as far as you have your private keys with you. Then, why decentralized? Because of the governance. So we believe in decentralized autonomous organization whereas the power is owned by the community of token holders. So there is less risk of a single point of failure in the decision making. Again, if we take the cases that we looked at before, there's always been some mismanagement in the projects, in the companies, mostly due because there was a single point of failure represented by the head of the company. If the company and the project is managed by a DAO, we remove the single point of failure. Permissionless. We were talking about creating an inclusive financial ecosystem. This is extremely important. The premises of the birth of crypto was to bank the unbanked. We completely forgot about that aspect. We completely forgot about the unbanked people. In decentralized finance, we can create a permissionless, decentralized ecosystem where anybody can join. There is not a third party that can deny access to financial opportunities like it happens in traditional finance. So this is what we've been working on for the last couple of years at SingularityDAO. We have a fantastic team. We have lots of opportunities available. If you want to check it out, visit singularitydao.ai. And yeah, thank you. I'll be able to answer your question later. Thank you so much. Sorry for taking too long.
Thank you, Marcello. Fantastic. Make sure to catch up with Marcello outside at the networking events. Thank you so much.
Thank you.
Thank you.
I'll keep it later.
Well, our next speaker is we're good? Yes, okay. Our next speaker is a very special guest of AIBC, David Meltzer. He's a legendary sports executive, entrepreneur, investor, co-founder of Sports One Marketing. David has been recognized by the Variety magazine as their Sports Humanitarian of the Year and awarded the Ellis Island Medal of Honor. He's also the executive producer of